Welcome to episode 16 of the PerFinEx community investing called Green Trees, Green Charts. Finally! After almost half a year, all three investing strategies had a positive return. Some are even up by more than 5% in November. The last time we had a positive return in all three investing strategies was August, the episode in which I wanted a crash as my birthday present. Well, I got what I wanted, didn't I? Traditionally, we will start with the pro-investing news today, then the negative investing news, and the three portfolio updates afterwards. All chapters in the timeline, so feel free to skip to whichever part you're interested in. Let's go. Pro-investing news! In September, inflation in the euro area was at 9.9%, and in October 10.6%, at an all-time high since the euro was introduced more than 20 years ago. Now for November, a new high was expected, and we got pleasantly surprised that inflation was at just 10%. Now you might say,
"But Axel, that's not good at all."
Yeah, well, it kind of is, as weird as that sounds. I'm not saying that these high inflationary times are over now and we come back to normal again. Normal. Please don't get me wrong here. Nobody's expecting actually that inflation is coming down significantly now. It could stay on that level for quite some time or reach new heights as well. The point is, after more than a year, inflation stopped rising for once, and that is a small light in a dark room. Why exactly is that good news for investors? Because it could mean that our European Central Bank will take things slow, with further increasing our key interest rate in the euro area. That is also what Federal Reserve Chairman Jerome Powell said for the American Central Bank, that they might slow things down in December. Here you can see that our key interest rate went up quite a bit since summer, from 0% to 2%. And if inflation comes to a halt, the ECB might follow, as they usually only react to the inflation data. And the lower the interest rate, the higher usually the stock market, the bond market, and the real estate market, because money is cheaper. What is maybe not so positive, the global stock markets went up quite a bit since the beginning of October. Some regional markets are up by even 10% over the last 8 weeks. Now 8 weeks is a pretty long time of just straight up. So don't wonder if the market takes a week or two to breathe, relax, take a step back, and continues to rise again. All normal, nothing to be worried or scared about. Investing is no one-way street that just goes up, even if we want it to be that way. And secondly, the time of negative interest charges, Verwahrentgelt, as it was called in German, seems finally over thanks to the rising interest rates. So regular savings accounts that return close to 0% over the last years are finally a really good option again for everyone that wants to safely store his money for a couple of months or years. Because investing in the stock market should be done only with a long-term horizon. If you just want to park your money for a year or two, a savings account is probably better than the stock market. Here's a screenshot of our savings account calculator. You can get 1.65% interest in a flexible savings account, Tagesgeld in German, and up to 3.8% in a fixed-term savings account, Festgeld in German. But be careful, the 3.8% fixed-term savings account is in US dollar, so you have the currency fluctuation risk. If you want a euro fixed-term savings account, you can get up to 3.55%. Both calculators are linked in the description if you want to see how much interest you can get when parking your money. And with the blue buttons on the right, we get a small affiliate commission at no extra cost for you. So we would very much appreciate it if you click yourself to the website of whichever bank you're choosing with our calculator. High safety investing strategy is up by more than 2% in November. It feels so good, as this was the only red chart in last month's episode. It was only down by 0.03%, but still red. So I'm very happy to welcome everyone investing in the high safety investing strategy to the winning side. It was tough, with the rising interest rates, but we got it done. In case you're wondering how this is connected, high safety investing strategy is about 60% to 70% bonds and the rest is stocks. When interest rates rise, bond prices usually fall by 7 times as much. So a 1% rise in interest rates means bonds usually fall by about 7%. And as interest rates rose by 2% in summer, as seen earlier, bond prices fell significantly. But we got one really good, if not two really good months behind us, and the 10,000 euro exemplary portfolio is up by exactly 260 euro since last episode. So with the small dividend in November and all other dividends before, you are down just 180 euros since the start in August last year. Still a minus, so I don't like it, and everyone investing in this portfolio probably doesn't like it either. But with everything going on in this world, minus 1.8% is pretty okay-ish, I feel. The prominent passive income investing strategy is up the most since the last episode, which will also make the most of you guys very happy because the most of you are invested in this strategy. We are up almost 5% last month. That is 570 euros for our 10,000 euro exemplary portfolio. So we are down 5% since the start of the community investing in August last year. Or are we? Well, one thing's for sure, November paid by far the highest dividend ever with 68 euros. Almost 69. Damn. So close. So with all the dividends combined, this investing strategy is actually down 180 euros or 1.8% since August last year. Now you might be thinking, haven't I heard that number just a moment ago? Yeah, you did. High safety investing strategy is also down by 1.8%. So far, it's a coincidence. If high return investing strategy is also down by 1.8%, it's not a coincidence anymore, it's a conspiracy. Alright, let's test our conspiracy theory with the high return investing strategy that is up by about 3.6% over the last month. Our exemplary 10,000 euro portfolio stands a little over 400 euro plus since the last episode. And the overall minus since the start in August last year stands higher than the other two investing strategies with 11.2%. So in order to be down by just 1.8% here, we would need a lot of dividends, am I right? Did we get a lot of dividends? No. I gotta say it like it is. Overall dividends since last August stand at 220 euros. Overall minus of the portfolio is 1,250 euro. So the real overall minus is about 10%. Let's see what we can do here to get this investing strategy growing as well. If you want to take part in our attempt to grow the 3 different investing strategies, even the high return one, feel free to open your free Fidelity investment account with a link in the description. Everything can be done online, should just take a couple of minutes. After you're done with that, please identify yourself either with video ident with your mobile phone or with post ident by physically going into a post location. If there's ever any problems with that, let us know and we'll fix it. And once you're done with step 1 and 2, we will set up a meeting to discuss the right investing strategy for your personal financial situation. As this is the last video for 2022, I want to thank all of you that you trusted us with your hard-earned money in 2022. And I'm very much looking forward to invest together with you in 2023.